On November 28, 2023, Charlie Munger died at age 99, just weeks before what would have been his 100th birthday. But in his final months, he gave several interviews that contained warnings most investors completely overlooked. While everyone focused on his witty one-liners and timeless wisdom, they missed the urgent alerts about what's coming for the market in 2024, 2025, and beyond. Today, we're uncovering what Munger was really trying to tell us, and why 2026 might prove he was right all along. In May 2023, just 6 months before he died, Munger gave a stark warning to the Financial Times that sent shockwaves through banking circles, but retail investors barely noticed. He declared, "A lot of real estate isn't so good anymore. We have a lot of troubled office buildings, a lot of troubled shopping centers, a lot of troubled other properties. There's a lot of agony out there." But here's what everyone missed. Munger wasn't just commenting on real estate. He was warning about a banking crisis. He revealed that American banks were full of bad loans tied to commercial properties, and banks were pulling back dramatically, becoming way tighter on real estate loans today than they were 6 months ago. At the 2023 Berkshire Hathaway meeting, Munger's last, Buffett noted the buildings don't go away, and Munger ominously added, "But the owners do." Translation: property values are collapsing, owners are going bankrupt, and banks are stuck holding worthless collateral. Here we are in 2026, and commercial real estate distress is accelerating exactly as Munger predicted. The banks that ignored his warning are now paying the price. In his final interviews, Munger delivered a message that destroyed the dreams of a generation of investors, but hardly anyone paid attention. He stated bluntly, "It's gotten very tough to have anything like the returns that were obtained in the past. At the exact time that the game is getting tougher, we've got more and more people trying to play it." Think about what he was saying. The golden age of investing is over. The 20% annual returns that Berkshire achieved since 1965? Those days are gone. The easy money from simply buying index funds? That era has ended. Munger explained it simply in his November 2023 CNBC interview. Getting even 3 to 5 great investment opportunities in a lifetime is rare now. He said, "It's the nature of things that a very intelligent man working hard maybe gets 3, 4, 5 really good long-term opportunities of buying great companies at a cheap price. It happens rarely." The harsh reality? Most investors today are fighting over scraps, chasing mediocre returns in an increasingly crowded and efficient market. Munger knew this, accepted it, and adjusted expectations accordingly. Most investors refuse to do the same, and they'll pay dearly for their delusion. Here's the warning that stunned everyone who was actually listening to Munger's final interview. He admitted something shocking. Berkshire could have been worth twice what it is by using more leverage, but we knew enough to take a good helping when we were offered a trip to the pie counter. Now we did take way smaller a helping than we could have easily handled. But then he said this, even though they could have made more, the extra risk we would have taken would have been practically nothing. Yet they chose not to. Why? Because Munger understood something most investors don't. Protecting your downside matters more than maximizing your upside. In that same conversation, he confessed, "I constantly am aware of the facts that I basically screwed up. Given the hand I dealt, I could have done a lot better. Quite easily. Done a lot better." Think about that. A man worth billions who achieved one of the greatest investment track records in history, looking back and saying he could have done better. If Charlie Munger thinks he made mistakes and left money on the table, what does that say about your portfolio? The lesson everyone missed? Even legendary investors make errors. The difference is they survive them. Are you positioned to survive yours? In his very last interview with CNBC in November 2023, Munger was asked for his secret to living a long, successful life. His response? Avoid crazy at all costs. He elaborated, "My game in life was always to avoid all standard ways of failing. You teach me the wrong way to play poker and I will avoid it. You teach me the wrong way to do something else, I will avoid it." Everyone thought he was just giving life advice. But this was an investing warning disguised as wisdom. Look at what's happening in markets today. Meme stocks, speculative crypto, companies with no earnings trading at absurd multiples, retail traders gambling on options they don't understand. That's the crazy Munger warned about. And in 2026, as we're seeing market volatility spike and speculative positions unwind, his final words ring prophetic. Avoid the crazy, or the crazy will destroy you. He practiced what he preached. He noted watching friends avoid obvious dangers. All the people I know and my friends now, they never would have become alcoholics. It was too dangerous. They don't get near it if it takes that many fine people into deep trouble. Apply that to investing. If something has destroyed many smart investors before you, why would you be different? Perhaps Munger's most chilling final warning came when he told the Financial Times, "I do not think that we can take it as a given that American democracy will prosper and flourish forever." Most people dismissed this as an old man's pessimism. But Munger never spoke carelessly. He was connecting dots between political instability, banking fragility, and market risk that most analysts refuse to acknowledge. On banking specifically, he observed, "It's not nearly as bad as it was in 2008, but trouble happens to banking just like trouble happens everywhere else. In the good times you get into bad habits. When bad times come they lose too much. And here's the kicker that everyone missed. It's not that damned easy to run a bank intelligently. There are a lot of temptations to do the wrong thing." He was telling us that banks are making the same mistakes again, that the system hasn't learned, that trouble is coming. And notice what Berkshire did? Despite their history of rescuing banks in crisis, Goldman Sachs in 2008, Bank of America in 2011. They sat out the 2023 banking turmoil completely. Munger and Buffett saw something they didn't like, and they stayed away. Shouldn't you pay attention to what made them cautious? Charlie Munger's final warnings weren't about getting rich. They were about surviving what's coming. Commercial real estate collapse, lower returns across all asset classes, banking system stress, political instability, speculative mania that will end badly. He lived 99 years by avoiding mistakes, not by being brilliant. His life advice was simple. Have low expectations, have a good sense of humor, and surround yourself with love of friends and family. The question is, are you listening now, or will you learn these lessons the hard way? Munger gave you the roadmap. The choice is yours.